Hi, it's Lee McConnon from Buyers Advocate. Today I'm sharing a quick Melbourne property update. So what is the current market doing? Here's the short version. Quality property is moving. Stock is still tight and competition is very strong for A-grade homes and well-located investments. Even B and C grade stock is now moving as FOMO is starting to set in. Melbourne median house prices are increasing, with Domain reporting a house median of 1,060,000 in the June quarter 2025, which represents a 2.3% increase for the quarter. Unit prices have also increased by 2.7% in the quarter, and auction clearance rates are now in the 70% range as compared to 60s for the same period last year. Inquiry into our office is surging from interstate and overseas investors. Inquiry is up over 200% on the same time last year. They're seeing value in Melbourne. They feel the city has woken from a 4-year slumber and is now entering a growth cycle, while some other states feel closer to the top. And we're also seeing at auctions more interstate activity, a noticeable lift in phone bidders on the day. That extra buyer pool really changes the tempo. So what key factors are driving the market? Firstly, relative value. On a like-for-like basis, many investors see Melbourne's inner and middle rings as undervalued versus Sydney and parts of Queensland and South Australia and even Perth. Second, borrowing conditions and sentiment. With interest rates falling, this has improved consumer confidence and serviceability, which is increasing the number of buyers as well as the prices they're prepared to pay. Third, population and rental pressure. Net migration and tight rentals continue to support demand in commuter-friendly suburbs. Fourth, low new supply where people actually want to live. Planning friction, construction costs keep a lid on new, truly desirable stock, and that supports prices for established, well-located homes. So what opportunities are there for buyers? 3 areas stand out. Inner ring period homes that need light work. Owner-occupiers love them, and you can get a major value add without a major build. Focus on streetscape, land, orientation and floor plan. Townhouses and single-level villas in transport-served middle suburbs. Often better land content per dollar. Consistent rental demand. Great for investors who want balance between yield and growth. And then there's select inner city apartments with scarcity value. So we're talking about boutique blocks, good floor plans, parking helps. We want to avoid high supply towers with high OC fees. Now the bit that really wins or loses deals, and that's reading the market. Price guides move. Buyer depth shifts suburb to suburb. Your advantage is to target opportunities that are actually within budget today. That might mean being flexible on the exact asset type while staying disciplined on fundamentals. If you chase today's dream brief at tomorrow's price, the market will run away from you. If you read the tempo, pivot early and focus on the best property you can buy now, you can get ahead of the next price step. A recent property example from the weekend, our clients came in wanting a double-fronted home in Richmond. On paper, great brief, but once we tested the live market, it was clear that the price point had moved past them. Rather than forcing it, we pivoted quickly to a single-fronted options in prime streets in the same suburb, tighter budget fit. Still stronger owner-occupier demand and long-term growth. On auction day, there were 4 active bidders and a lot of phone bidding on the mix. Because we knew the buyer profile skewed to first home buyers, we set the tempo early, controlled the increments and kept the emotion out of it. Result, we secured a fantastic single-fronted market before the market had stepped up another notch. So the lesson, flexibility, speed to make the right decision. That's how you stay in front of price rises. So the challenge to be aware of is competition in popular pockets, very heated in the 600,000 to 1 million range, low listing volumes. Homes don't wait for you. You need to be ready. Lending friction, documentation takes time. Don't let admin cost you a deal. Yield traps. Don't chase headline rent. Right? Analysis paralysis. Waiting for the 5 perfect options at once isn't realistic in a low stock market. So here's the actionable advice for this year. Be clear on your brief. Transport access, school zones where relevant, streetscape and land content, functional floor plan and natural light, what work you may be willing to do. Most important, work compromises you're willing to make. And be ready to act. Updated pre-approval, solicitor briefed and contract review path ready, building and pest inspector on call. When the right property appears, you can move the same day. And price the market in real time. Use live comparables from the last few weeks, not last season. Sense check guides street by street. Adjust ceilings before auction day, not during it. And focus on opportunities within budget today. If the market lifts, pivot to the next best A-grade asset before you're outpaced. That could mean single fronted over double fronted, townhouse or villa over house, and maybe an apartment over a villa. Leverage local intent and negotiation expertise. Agent read, buyer depth, auction strategy. This is where a buyer's advocate compresses time and risk. It's also how you avoid overpaying when emotions run hot. Keep a short rolling shortlist, 3 to 5 real targets. If one goes, replace it fast. Momentum beats drift. In summary, Melbourne looks compelling right now. Demand is building, supply is selective. Smart buyers who read the market and stay flexible with a disciplined brief can still buy exceptional assets. If you want help narrowing the brief, pricing the market in real time and executing with confidence, book a quick strategy call via the link below. We'll map your suburbs, line up real options and put a plan around inspections, due diligence and auction day so you buy the right property at the right price with confidence. I'm Lee McConnon from Buyers Advocate. Buy well, and I'll see you at the next update.